How's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. Today's topic, I want to discuss with you how does an annuity work, and kind of explain to you some of the pros and cons to help you guys out understand, essentially anything with annuities and whether or not it may be a correct fit for your specific situation. Now, with traditional retirement accounts, you could, with anything regarding an annuity, you could essentially start an annuity with cash accounts. You could start it with IRA accounts, 401k, rollovers, 403b rollovers. There's a couple of different factors to start an annuity contract. So if you have money obviously in cash in the IRA, the 401k, the 403b, understand that you are eligible for an annuity contract. So why exactly would you want to be interested in any sort of annuity? And it all has to do with the word income. Okay, annuities are the only type of, and I stress the word only type of financial product that offers contractual guarantees on income. And what it does is it's income that you can never outlive. So if we take the example of a typical IRA account, you have somebody that, let's say they're 50 years old and they've been accumulating money into their IRA account. Let's say this IRA account is $100,000 for very easy math. Well, right now, this little bucket, think of it kind of like a bucket of money. Well, that bucket is typically tied to, about 90% of the time, is tied to some sort of mutual funds. Now, anytime that the money that is being placed within that bucket, and however well the mutual funds do, equal whether or not this bucket is going to be larger or is going to be smaller at the end of every year, at the end of every day, whatever that is. Well, there's a risk associated there. With mutual funds, and I always stress with every video, I say the average portfolio in 2008 lost 57%. So, and also on top of it, so you're susceptible to a downward market loss whenever you're tied to mutual funds, and you're also susceptible to the fees, the mutual fund related fees, and also the advisor fees that are set up within those accounts. So if you say, okay, my money is already established, my $100,000 is already going to be set up specifically for retirement monies, why exactly would I want to have the risk associated there? And that's why I've always stressed, you could leverage an annuity in the proper annuity. I'm not talking about variable annuities. I'm talking about a combination of either hybrid annuities, deferred annuities, index annuities, different things that will allow your account to grow with upward market movements and not lose anything whenever you have downward market losses. So if you think of it kind of like that same IRA type account, you can have an IRA annuity contract. And what this means is, just like that bucket with the $100,000, it has an annuity shell over it, meaning that this shell allows you to have contractual guarantees. You could have that indexing strategy with this type of account, meaning that you understand if you're 50 years old and you say I want to retire at age 65 or age 60, whatever that is, from that point in time you could only receive credits into that account. It's either going to receive credits or you're going to receive 0%. Receive credits or receive 0%. So in one aspect, you have your account value, the amount of monies that are growing within this bucket, where okay, one year you might see the bucket this large, the next year it's going to be a little bit larger, the next year it could be a little bit larger, and you're having the power of compound interest work in your favor while eliminating any advisor fees and while eliminating any mutual fund related fees and downward market losses. So on one aspect, an annuity works very well for a safe, consistent growth regarding retirement accounts. On the other aspect, the main word with any sort of annuity is income. When you're ready to turn on income, and especially with the deferred annuity, when you're ready to turn on income, let's say you place your money in that bucket and it's tied to an IRA annuity, this money is going to grow, and let's say after those 10 years, after those 15 years, this money is now sitting at $200,000. It was very safe. You weren't receiving any downward market losses. You weren't receiving any mutual fund related fees in the process. There's also additional income aspects of that annuity known as riders. It's an income rider, and this became very apparent after 2008 for individuals that say, I don't want to leave my money in the market, and I do not want that chance to outlive my money, to run out of money in retirement. So what happens is individuals call my office and they say, hey, listen, I have X amount of thousands of dollars. is an annuity right for me? How exactly does an annuity work, and how can it benefit my specific situation? So you could take your IRA monies, roll it over into an IRA annuity. You understand that your annuity will either be increasing or flatlining, and whenever you're ready to turn on income, you have a secondary guarantee through the company's standpoint that is income, that is maximized income that you can never outlive. So in one aspect, let's say your actual physical money is sitting at $200,000, you could have something known as an income account, which is just a calculation account sitting at $300,000. So what the company does is they say, okay, well, you could either walk away with this money, this bucket of money at the $200,000 and do something else, play the market, pull money out however you please, or you could have that peace of mind and actually turn on your lifetime income stream that you can never outlive. So let's say at age 65, this number might be, or age 60, this number might be 5% of a withdrawal rate. They will take what's sitting at your income account times your withdrawal rate, which will equal, in this case, it would be $5,000 income that you can never outlive. So you either have the bucket of money that you say, oh, I could just pull out $15,000 every year and have no guarantees, or I could have a contractual guarantee through the company standpoint that I am guaranteed at least $15,000 every single year until the day that I pass away or to the day that me and my spouse passes away, depending upon the contract. So they could do a couple really, really neat things, but you have to understand exactly how the annuities work and essentially how does the company offer that contractual guarantee. And it's by something known as the law of large numbers. Okay? And this is how all types of insurance actually work. And what they do is they take your monies and millions of other individuals' monies, understanding that some individuals might turn on income instantly, some individuals might wait 30 years to turn on income, and they could essentially hold on to that money and leverage the law of large numbers, leverage all those millions of individuals that have contracts to invest into very safe, consistent rates of return on the back end. So anytime you look at an insurance company has to abide by the contractual guarantees, the contractual laws on both a state and a federal level, making sure that your money is very, very safe. So one of the things, if this is appealing to you in any way, and you want to be interested in an annuity contract and essentially have that peace of mind for retirement, please give our 1-800 number a call. The reason why I stress this is we leverage hundreds of the top carriers and hundreds of the top contracts in your specific area, making sure, and we have proprietary relationships with these carriers, making sure with pure certainty that we could give you the best possible options on your annuity contracts. Some annuities are excellent for individuals that are age 60 that want to turn on income immediately. Other annuities are excellent for someone who's age 40, 55, whatever it is, but understand it's not a one-size-fits-all product. They have hundreds of different contracts, and they're all specific to an individual situation. Once again, my name is Derek Afasi. I want to thank you for watching this video. Please call our 1-800 number, 1-800-566-1002, and subscribe to my YouTube channel and be on the lookout for some of my most updated videos. Thanks, guys.